Hi, everybody. I'm Jeff Barton for the Mortgage Minute, for the Mortgage Voice. You can see us here each and every day, almost about 3 times a week on LinkedIn and Facebook. We also do Instagram, Twitter, some of the other social medias. I have a blog, bartonblog.com. You can go there, bartonblog.net, and see my daily or weekly or monthly musings as to other particular items within the business and within life in general. YouTube, yes, you can see this show on YouTube. We have a radio show we also do called The Mortgage Voice, and we do that show once a week on Friday, on Saturday and Sunday. It airs on 5 radio stations in 3 different states. We're out in the IG, the Inland Empire. Really like those people out there, and down in Albuquerque. Hi, everybody down there, as well as Las Vegas, Nevada, and up in Tahoe. So let's get right to what's happening today. The Federal Open Market Committee meeting has been meeting today and will meet again tomorrow. We don't expect much to happen out of that, except the continued support of purchasing of mortgage-backed securities as well as treasuries to the tune of about $120 billion a month. One of the things that the GSEs are looking forward to is exiting from federal sponsorship or receivership. I'm not sure whether that's good or bad. We're going to get to that more into that during our radio show. And if you want to see that radio show, as I said, you can go to YouTube, probably on Saturday or Sunday. Jeff Barton, the Mortgage Voice, the conservatorship, which has been in place since 2008, since the federal government came in and through the Treasury bailed out Fannie and Freddie at about $165 billion. Now that money's been paid back and then some. And then since the Obama administration, the late stage Obama administration, has been sweeping the profits of Fannie and Freddie to the tune of about $4 billion to $6 billion a month since that time, during the entire Trump administration that was happening. And now, I guess right before Trump administration exited from power, they released the GSEs from having that money swept into the Treasury so that they can build up enough reserve. And I think it's $189 billion each to be able to then have the monetary wherewithal to be able to exit conservatorship. They're looking, Fannie and Freddie, to borrow money from the private sector in order to get out a lot quicker. But we'll see what happens in the Biden administration. There's a whole back and forth about whether it's a good thing, whether it's a bad thing. My own personal opinion doesn't really matter, but it's what's going to happen and how the market's going to react to that. Yes, that's all very important. But let's get to some real nitty-gritty nuts and bolts, I was going to say. The rates today, 2.8% for the 30-year fixed, 2.28% for the 15-year fixed, 2.27 for FHA, 3.29 for the jumbo, and 2.23 for the 5/1 ARM. The 10-year is still above 1% yield, or 1 point yield, 1.0347 yield. We've been sticking around that point now for about a week to 10 days. It's interesting to see what's going to happen, whether we go below that and rates drop again, or whether we continue this slow, steady march towards 3.5% interest rates, which of course would mean that the yield would be probably closer to 1.5%, 1.75%. Let's see. The GSE release, we talked about that, a little bit about non-QM coming back strong into the marketplace. A number of companies, Citadel has rebranded to ARCA, and they've sent out a large bit of promotional material to companies like mine. Malibu Funding that sponsors the show. Appreciate their help. The NMLS number is 796204 for Malibu Funding. Real estate prices are up, availability is down, affordability is up, but then again, you have to have a job and all those things going along with it. We see COVID vaccinations, again, another slow death march, but it is happening. Lot of tragedy in that, obviously. The economic growth is slated to be at 4.3%. It was only down about 2.7% for the year last year. There's been some surprising news from a lot of companies out there saying they did much better than expected. The Federal Open Market Committee meeting happening now. I think that's it for right now. Anyway, I'm Jeff Barton, your voice for the Mortgage Minute, and we'll see you next time.